Good day, traders, to my new temporary office. I moved from the living room into the bedroom for different purposes. I can shut the door here if there's noises outside and so on. So I think it will be better. In this video, I want to quickly discuss momentum and pullbacks and just a way that I visually look at the charts to identify, am I looking at a corrective move now, pullback, or is there still an impulse? So this is a bit of candle anatomy, looking at the candles, the sizes, and how they form, and then applying that just to logic, applying that to where price is potentially going to go, if we are bullish or bearish, and then setting that out on the charts. So let's hop on over. This is going to be a quick one. I want to make this video a bit quicker so that you can watch the full video and not just stop at 4 minutes. Because I know we all do that. We skip through it, or we just watch the first 4 minutes and say, nah, this is not nice, let's jump to the next one. So quick and easy, trying to keep it under 5 minutes, and then that's it. All right, let's jump to the charts. This is EU. So what I wanted to show you is the following. I have a few examples that I found here that I want to look at. Let's start over here. This is the 1 hour chart. First of all, do you see all of, let's just clean it up a bit. Okay, down candles, we have 1, 2, 3, 4, 5 big down candles moving towards the downside. I'm not focusing now on structure breaks or market structure. That's not what I'm looking at. I'm going to show you specifically something else. So we have 1, 2, 3, 4, 5, 6, 7, 8 candles, more or less. And then look how long the pullback took and the amount of candles. So if we look at it like this, there we have 10 bars, took 10 hours. And then for the pullback to occur, 16 bars and 2 days and 15 hours. So we have different areas where we might look for shorts in that area. That's typically where I would have looked for a short in that area. And then we see the continuation towards the downside. Let's look at another example. I'll get to the point in a bit now. Again, momentum. It's not a big pullback. Well, not really a pullback at all. But we have momentum for 6 bars, 6 hours. And then the correctiveness for 20 bars and 20 hours. Okay, keep that in mind. This example, we have an area of demand in here. Then we can see the price takes about 7 bars, 6 bars to get towards the upside, the impulse, and then the correction back to that area, 20 bars and 20 hours. Again, over here, the impulse, we can say 3 bars. The correction took 25 bars in 1 day. So what this basically means, if we draw it out, if we have an impulse, we want to see a slow down, price slowly coming back to our area of supply and demand before another impulse leg towards the upside. If price impulse towards the upside, and then we have another impulse of candles towards the downside, this could possibly mean that we maybe shift direction and we're moving now in the opposite direction, and that is not what we want. We want to stay with the trend and stay bullish. If we're bullish, we want to stay looking for buys. So in this case, again, you can see the momentum towards the downside for 12 bars, then the pullback 21 bars. You can see how the candles are big, impulsive candles, and then the pullback, smaller candles, more wicks towards the upside. What is this telling us? It's telling us 2 things. First is that there are more buyers that's willing to open the purse to sell, more sellers willing to sell, because you can see the momentum is a lot stronger going towards the downside. Big candles are moving towards the downside. And then the buyers are reluctant to buy back. This is just how I metaphorically look at it. The buyers are reluctant to buy back, and it's much slower. They don't want to buy at this price. The sellers are stronger, and they want to keep on selling. Here we have an area of interest. Just this candle, this big candle before the move down, and we can see how price returns to this area. And now you can apply different stuff to it. You can apply fibs to it. You can say that's not the fib tool. This is the fib tool. You can apply the fib to it and look for anything in the 1561.8 pocket. You can say this is your area, and you can, there's different ways you can approach the entry, but this is not about entry. This is just about reading the momentum. Now here we have a slowdown again after this impulsive, but you can see how the candles are slowing down. They are smaller, and the big body candles are becoming less frequent. Here we're slowing down, and now we're evening out. You can see price is starting to move more towards the sideways and ranging. And then all of a sudden, we have an impulse move towards the upside again. I haven't broken any structure yet. You can look at it like this. There's our last high. We haven't broken any structure yet with this impulsive move, but the character changed. You can see we have an impulse move, big candles, and then a slowdown, Then we have this range, and we have then an impulsive move towards the upside, which is these two candles, a pullback into the range, and then this massive push towards the upside. Now I want to go to the lower time frames and apply this same knowledge, same understanding, just to the lower time frames. Let's look at the 5 minute. Look at the 5 minute impulsiveness move towards the upside. We can see that it was basically 4 bars, 4 or 5 candles. And then look at the corrective move back, 62 bars. This builds up liquidity, this collects orders. There's a lot of things happening in that slowdown period before the big move towards the upside. And I know this was a news event, but usually news events, they align with technical analysis and it acts like a catalyst. So just back to basics. When we see an impulsive move towards the upside, we want to see price slowing down correctively like this. Maybe create some equal lows, maybe create some consolidation areas. I'm not too worried about price stepping down, because we want to see price stepping down because we know there's liquidity above those areas for price to take that liquidity. We have another set of equal lows over there with liquidity below those levels, and then price ultimately reaches into the supply and demand area, and we see a massive reaction towards the upside. So key points that you need to take home. Key point number one, we want to see price impulse into the direction that we want to go. Number two, we want to look at the candles and see how they slowly move back towards the downside. In this case, where we have a bullish example, we want to see a slower correction towards our point where we want to take a buy or sell, our supply and demand area, whatever that area is. Even if you use fibs, this is your swing high to low, and you want to look at the 78.6, whatever the areas you look at, you want to see price slowly coming back to that area. If you use fibs, if you use supply and demand, if you use smart money, whatever you use, just reading how price is acting and coming back to your area will give you a clear indication of what's going to happen next. If price was just massively impulsing towards the downside, if this was not there, if we were there, and price just printed massive candles towards the downside, then I would not look for buys in this area. Definitely not look for buys in this area. Then I would look for pullbacks, slow pullbacks into an area, and then sells. Hope you understand that. That was it for this video. Hope it made sense. It is 9 minutes. Sorry, longer than 5 minutes. I'm going to try to be slower and, well, not talk faster, but pack more into it. Hope you guys enjoyed it. and have a great day. Cheers.